All right, let's talk about the massive tax shakeup of 2025. There's this huge new law, the One Big Beautiful Bill Act, or OBBBA for short. And it's about to change the financial world for, well, pretty much every single one of us. We're talking everyone from service workers to seniors, all the way up to major corporations. The impact is going to be big. So today, we're going to unpack what's actually inside this thing.
So what's the deal with this bill? Is it a massive tax cut for everyday Americans, or is it just a really complex, super costly gimmick? The debate here is pretty intense. On one side, you have supporters who are calling it a much-needed tax cut for working families, something they say will really kickstart economic growth. But on the other side, critics are sounding the alarm, warning that it's a fiscally irresponsible move that's going to pile trillions onto the national deficit and make our tax code an even bigger mess.
Okay, so let's get down to basics. What is the One Big Beautiful Bill Act? Well, at its core, OBBBA is a sweeping law from 2025 that does two main things. First, it makes a lot of the 2017 tax cuts permanent. But, and this is the big part, it also introduces a whole bunch of brand new deductions, credits, and rules for both individuals and businesses. It really touches everything.
So to make sense of this whole thing, here's how we're going to break it down. We'll start with why this new law came about, then we'll get into the changes for your paycheck, what's new for businesses, and finally, we'll look at the bigger economic picture.
All right, first up, a sweeping new tax law. So what is OBBBA, and more importantly, why now? Why did this massive bill happen in the first place? Well, the main reason was something that had tax professionals really worried. They were calling it the tax cliff. See, without this new law, the lower tax rates we got from the 2017 tax cuts were all set to expire at the end of 2025. That means if nothing was done, most Americans would have seen an automatic, pretty hefty tax hike. So this bill was basically created to stop that from happening, to make many of those tax changes permanent and give everyone a little more certainty. Okay, let's move on to the part you probably care about most. Changes for your paycheck. What does OBB actually mean for you and your family? Let's get right into it, because this bill introduces several brand new deductions aimed squarely at working folks. Check this out. $25,000. This is the new maximum annual deduction for tip income for service industry workers, and it's a huge deal. It's in effect from 2025 to 2028, and it means that for millions of people, the first $25,000 they make in tips is no longer subject to federal income tax. Now, it's really important to remember, payroll taxes for Social Security and Medicare, those still apply. But still, this is a game changer.
And here's another one for hourly workers. $12,500. That's the new max deduction for qualified overtime pay if you're a single filer. It's $25,000 if you're filing jointly. So, you know that extra time and a half you earn? This tax break applies to that extra pay, making those long hours a little more rewarding.
Next up, $10,000. This is a brand new one. It's the maximum you can now deduct each year for interest paid on a loan for a U.S.-assembled vehicle. So if you're buying a new car that was put together here in the States, you get a break on the interest. And the nice thing is, you don't have to itemize your deductions to claim this one, though it does phase out if your income is on the higher end. This is in place from 2025 through 2028. Now, this next one is a huge deal for people in high-tax states. We're talking about the state and local tax deduction, or the SALT cap. The old cap was $10,000. The new cap from 2025 to 2029 is $40,000. So it's been quadrupled. This is a big relief, but it is targeted. It starts to phase out for folks with incomes over $500,000. Okay, so beyond all those new deductions, OBBBA also makes a lot of the key changes from the 2017 law permanent. This is all about certainty. For example, those lower individual income tax brackets, they're sticking around. The much higher standard deduction, $15,075 for singles in 2025, that's permanent too. Same goes for the increased exemption for that tricky alternative minimum tax. The child tax credit also gets a permanent boost to $2,200 per kid, and there's a new $6,000 senior bonus deduction for anyone 65 and over.
All right, we've covered how this affects your personal paycheck. Now, let's switch gears and talk about the new rules for business. And this really does apply to everyone, from the small shop on Main Street all the way up to major corporations.
So, one of the absolute biggest changes for businesses is making 100% bonus depreciation permanent. The way it works is pretty simple. Step 1, a business buys some qualifying equipment, say a new truck or some computers. Step 2,
Instead of writing off that cost over a few years, they can now deduct 100% of the cost in the same year they buy it. And step 3, that immediately lowers the business's taxable income for the year. It's a really powerful incentive for businesses to invest in themselves in a new gear.
And there's a lot more packed in here for businesses. Section 179 expensing for small business purchases, the limit's been bumped up to $2.5 million. R&D expenses for research done here in the U.S. can now be written off immediately again, which is a big deal for tech and pharma. The popular 20% deduction for pass-through businesses like S-Corps and LLCs, that's now permanent. And a little bit of good news for small businesses doing paperwork, the reporting threshold for Form 1099s paid to contractors has been raised from $600 up to $2,000.
But here's a really crucial point, summed up nicely by this PwC analysis. Conformity is often not automatic or all or nothing. What that means is, all these changes we've been talking about, they're federal tax laws. Each individual state now has to decide if it's going to follow along with these new rules. For businesses, this creates a super complex maze. A tax break they get on their federal return might not exist on their state return, and that can be a real headache.
Okay, so we've been deep in the weeds on the details. Let's pull the lens back now and look at the bigger picture. We need to talk about the winners, the losers, and the big questions that are still hanging out there.
You can really think about the impact of this bill in 3 buckets: the good, the bad, and the ugly. According to analysis from the Tax Foundation, the good is the potential for real economic growth, spurred by things like that permanent bonus depreciation we talked about. The bad, and it's a big one, is the impact on the national deficit. And the ugly? Well, that's the fact that our tax code just got a whole lot more complex.
And let's put some hard numbers on the bad part of that equation. Over the next decade, OBBBA is projected to reduce federal revenue by a whopping $5 trillion. Now, after you account for the economic growth it might create and some spending cuts, it's still expected to add $3 trillion to the national deficit. That is a massive number.
So you might be asking, how is this all being paid for? Well, part of the answer lies in ending a lot of the green energy credits we've gotten used to. As you can see, these are getting phased out pretty quickly. The EV credits, gone by the end of September 2025. Residential clean energy credits for things like solar panels, they end at the end of 2025. And commercial credits follow suit over the next couple of years. This really is a major policy shift.
And all of this brings us back to the big central question. There's no doubt this new law provides real tax certainty and some brand new breaks for a lot of people. But on the flip side, it comes with a much higher national deficit and a tax code that's more complicated than ever. So the question we're all left with is this: is the price too high?